What's going on, everybody? It's your boy C-Zar, and we are talking about HBAR today, Hedera hash graph. Hit that like button, you guys. Subscribe if you want to see more content like this. And let's get into it. I know with this look, some of you are wondering, is this a double top? Are we going down? If it was a double top, surely you would go lower than these lows. And if you were to go below these lows, surely you would see prices around 15 to 16 cents is what my expectation would be. So if you are to go lower, 15 to 16 cents is what you have to look forward to. You're at 30 cents now. However, does it make sense? Does it make sense, right? Crypto's about to rip. Crypto's about to rip. We're on the precipice, right on the cusp of seeing some more upside here. Does it make sense that this thing would just tank down here 50% in the midst of a pump throughout the markets? I don't think so. Would it make more sense potentially that we're finding a higher low in an overall uptrend, that we might even be having some kind of ascending triangle structure instead, which is a bullish pattern, by the way, instead of a double top? Wouldn't it make sense too that if this was a double top, why so much opportunity? Why so much time to get out? Why double tops, you guys? You wouldn't have the it wouldn't give you a moment like this where you just move sideways for a week until you're below the too late to sell point. You know what I mean? Like, I don't think it's a double top. It's not. To me, it's not indicative, right? Even this right here was more of a double top. That was like a true double top. And look at how fast you sold off immediately. Where this, it's taken dramatically more time to get to even half that drop. You know what I mean? So I don't think, and of course, you know, that this one came after a big run up, so maybe it had more reason to go down. There's ways that you could spin this, you know, but to me, it doesn't look like a double top. That's all I'm trying to say. Looking at the daily RSI, you've continued. I need to fix this. I don't know why it keeps going purple on purple. Leaf, I swear, man, I'm trying. I don't know what's going on here. Let's put it at the blue. There we go. So you got low after low after low. That's 2 lower lows in succession, right? 3 lows altogether, all lower lows. And all you've got here is higher lows, higher lows, higher lows, right? Imagine this indicator, right? You don't know anything about this indicator. You probably do, but let's just say you don't know anything about it. Let me tell you, you can only go to 100. You can't go above it, and it's very hard to get to 100. It's very hard to get past 90, okay? There's 90. Look at that, right? You barely got past that once, right? It's hard to do that. So if you can only, in an indicator that when you're moving up, it moves up too, and it can only go to 100, would it not be beneficial then if your indicator, as it's going to form new lows and you are forming higher lows, wouldn't that be a signal of strength? Because now you have more room to run without getting exhausted. And you're starting at a higher point than where you would have been, where you would have had less room to run before you get exhausted, right? So bullish situation. This is called hidden bullish divergence, right? You got to think about it. It makes sense that it's hidden, because what you're really seeing here is you're gaining strength, you're showing strength at your weakest moments. You're continuing to get weaker on the readings, and as you're getting weaker, you're actually getting stronger on the price. That's an overall bullish environment to be in, my friends. So no, I don't believe that you're going to go lower than this. I mean, you're at 30 cents now. Could you go lower from here? Sure, I guess, right? You could go maybe down to touch this line, maybe go right down to 27.3 cents. Maybe you even go below this line. This line, don't get too hung up on this line if you go below it, right? I would get more hung up on if you close any given days below, let's say, below about 26.7 cents there. If you close a day below 27 cents, 26.7 cents, then I'd be concerned. But if you get a wick below this line, or even if you close a day below this line, it's not the same as closing below these lows here. If closing below those lows is much more significant than closing below these lines. And in fact, with diagonal lines, oftentimes you'll find that after 1-2 touch points, on the third one, you will bottom right below it, right where everybody who thinks they know how to read a chart, they're like, oh, it broke the trend, it's going down. And then as soon as that happens, that's whenever it rips. You'll find that time and time and time again, right? Kind of like here, actually. This might be a good example too, right? Oh, as soon as we broke the trend, it's time to go up. Just kidding, right? Just diagonal lines don't matter. They don't mean anything. What matters most is the horizontal lines. Look, right here. You didn't break this level. You technically did. You technically did. But with closing an hour, a 4-hour, or a daily period, I'm sorry, with more wicks, or more wick to the upside than body, it would make sense this was a fake out. And of course, you had the repercussions. Again, the horizontal line providing more resistance than the diagonal lines do, right? Everybody can draw diagonal lines. Most people, as simple as a horizontal line is, most people don't think in terms of that for whatever reason. You want to look at the higher lows and the higher highs. So with that being said, beating around the bush here, you could go lower, just a little bit lower, but I wouldn't think you go. You're at 30 cents now. I don't think you go below 26.5 cents. I personally don't even think you go below 27 cents. You might not even get down to that itself. You might not even get below 28 cents. Who knows? You could rip from here. But if you went a little lower from here, is all I'm trying to say. It's nothing to be concerned about. Soon you will rip. I anticipate that right now, while it has this double top look, as you bounce out of here, people will start to see it for what it truly is, I think, which is a ascending triangle. If it is an ascending triangle, then this might suggest that you would probably start to break out of this. We might see some new all-time highs for Hedera. Maybe this week. Hold on. Sorry, guys. Had a cough. Oh, maybe this week. It depends on how fast we move out of here. I mean, it could do whatever it wants, but if we're just going off the given kind of trajectory path here, maybe it's sometime, you know, next week that we start to move up. Maybe it could be sometime next week, but you never know. You never know. Just because the pattern, the way that I have it poorly drawn here, it goes all the way out to here, doesn't mean that you're going to be consolidating until March. I don't personally expect that, but I do personally expect that whenever you do find support here soon, if not now, you could move down to like 28.5 cents, and that could be it, right? As you move up, as you progressively move up, it will look more and more obvious that you are about to break out of the zone. And whenever it becomes its most obvious here, after you've had 3 points, you're going to get a lot of momentum, a lot of buying pressure, not a lot of selling pressure. And that should get out of your way to allow you to climb up to the next level, high to low, where you're going here. The next technical level would be the 1618 at 46.2 cents, but I don't think you stop there. I don't think you consolidate at the 1414 to the 1272, this high and tight like this, to just stop here, right? If you pulled all the way back here and you're consolidating here, then okay, maybe you could stop here. But this high and tight, I think that you're going to go at least to the next level, which would be 69 cents, 81 cents. The 1886 to the 200 is not a likely stopping point. I will say that. It's definitely not a likely stopping point, but it would make sense that you don't stop here. So I guess the next technical level we could accept is there. To me, in this kind of situation where you're consolidating this high and tight, the next likely area that you would stop to is somewhere between the 2272 and the 2618. Of course, you could go higher than that as well, but my expectation would be that if this is some kind of bull flag, and I expect that it is, you know, from a high to a low or a low to a high, if you put that same low to a high here, you get that kind of upper limit target right there at around 216. It's completely possible that you could go perhaps not quite to your measure move, but just under it. That can happen. Perhaps you don't stop at your measure move. Perhaps you go through it, but the more that we dissect this, the more ways we look at it, it doesn't suggest targets below $1. It suggests targets above $1 and actually even targets above $2. So $1.22. So let's just say $2.20. That's probably the best estimate that I could give. You're at 30 cents now with the potential to go down to about, I would say 28.5 cents, 29 cents at the most. You might not even go down though. I mean, and even then it's 1.5 cents, 3 cents at the absolute most, right? It's nothing crazy. So is it a good time to buy? I think so. Not financial advice, not a financial advisor, but if you want to buy something at 30 cents and sell it at $1.22 or likely higher than $2, then yeah, it's a good time to buy, I think. Not financial advice. Nobody knows the future. You never know when this thing could just dump down to the ground, but with everything that's going on for HBAR, with all the fundamentals at play, I don't see that happening. And especially so, even if HBAR didn't have a lot of hype around it, if it didn't have that much going for it, if it was just a standard crypto, all the cryptos are about to pump in the top 500, man. So this thing's in that slew. The crypto markets are about to rally. This thing's been around for a little while. It's going to get a leg up just on that notion alone, let alone the overall bullish fundamental perspectives that are at play here, which led to this initial rally in the first place. So anyways, that's all I got for you guys. If you like the video, hit that like button, subscribe if you want to see more content like this. Thank you all for being here. I'll see you on the next one. Take care. Bye-bye.